You want to know what are the best stocks to buy now? I've spent over $100,000 buying stocks this week. I'm going to share 10 of those stocks today, as well as price targets to watch for. The first stock is AMD. Now, if you look at the RSI here, it's 32.45, but I posted in Discord this morning, it was down the RSI to 25.97. Now, anything 30 or less is considered oversold. Anything 70 or higher is overbought, and it can go from 0 to 100. Over the weekend, I did share in Discord the reasons that I'm bullish on AMD. I'm not going to read through it all, but I'm going to give you the highlights. The reality is AMD didn't have that bad of an earnings. The timing of it was pretty bad, and even though the market was excited and thought AMD was going to do a lot more in GPUs to compete with NVIDIA, the expectations in Fired Up Wealth weren't quite as aggressive. We look at AMD really as the CPU leader for AI data center. There's also a lot of opportunity when you think of AI PCs as well. Now, tariffs are of course going to impact companies like AMD, and they do have a significant portion of their revenue, like most semiconductor companies, in China. The company does have $4.5 billion in cash and reduced debts of $1.7 billion. And I do believe that at this price point, I'm going to show you a chart here in a second, it offers a very unique blend of growth and value. So when AMD was up here at 225, I trimmed it and I told Discord, hey, this is really expensive. And Chart Day, we're talking about, hey, AMD, you don't want to touch it up here. This is an air pocket. We thought the stock was worth probably 100 to 105 when it was trading above 200. The market was way ahead of itself and didn't really understand the GPU opportunity for AMD. I believe that under $100 DCA is very attractive for AMD. Now you can see the Fibonacci S2 is $93.06. The S3 is about $85. Some other areas to watch for: 94.28, that's the high of September, October, November of 2020. Also 93.70 and 93.12. Now this is all in Discord, so if it's something that interests you, join our Discord because I'm providing this information real time. There's no lag to it. Back on the 27th of February, we talked about $95 key level to hold. 81 is deeper support. That's 32% below February 4th. And the extreme case is probably between $70 and $75. Now, oftentimes people try to time the market and say, well, I think it's probably going to go to 70, 75 and I won't buy it until then. And sometimes that works out and it can be a really good buy for you. And I think if your portfolio says the stock is a fringe play, maybe that's the way you play it. But if it's something you believe that could be part of your core and it's something that you want to have a decent percentage on, 2, 3, 4, 5%, I really believe you start dollar cost averaging in that $95 to $100 level. And you save room, of course, because it could go lower. That's the way I like to do it. If you want to try to time it, be my guest, but it's very hard to do. It's not possible. You're not going to be able to time it. You can take a lot of stress out of it by paying for what you think a stock is worth. And then if it goes lower, you're happy to buy more. Now that's completely counterintuitive to what people teach you on the internet. That's because the majority of those people are really traders and not investors. If you truly understand the value of a company and you think it's worth at least $100 a share, you're not upset if it goes lower. You're buying more and you're thinking very long term. Let's think about AMD for a second. Let's drown out all the noise. And we're just sitting here talking one-on-one. That stock was just $227, and it's probably not going to get back to those levels anytime soon. Well, let's just say $150. Do you think AMD can be worth $150, say in 12 months? We're talking about a 50% return, which is going to crush the market. There's no guarantee that's going to happen, but if you have a long-term horizon, 2-3 years, the chances of that stock not being at least $150, in my opinion, are very low. In fact, I believe it'll be over $200 in that period, so 100% plus returns from here. Number 2 is A-Lab. This is Astera Labs. Now, this was a new IPO last year around March 2024. You can see it ripped all the way to 147. So down here at $36, all the way to 147, and lost half of its value in the last few days. So this got below $65 a share, and I think it's really attractive, especially below 65. I liked it even higher. Now, this is going to be an expensive stock. It's a high price of sales with a lot of growth, so there is some risk here. Most of you probably need to treat it as spec. So don't go too heavy on it, but the growth is out of the park. This is an AI data center play, and I do think this stock could get back to that 100 plus level sometime this year, probably even closer to 120. The Trade Desk, this thing, RSI, 18.3 this morning. And this is why you don't want to chase air pockets. When this stock was $141, you can see this huge air pocket from the trend line. And now, of course, we've broken all the moving averages and the trend line. We do have updated Fibonacci's that go actually all the way down here to 3207. I don't think it's going to get that low, and I do think it's attractive, really 75 or less, but especially when it gets closer to $65 cost average on Trade Desk. Now, I do want to mention that I bought this in both growth portfolios, but I actually dollar dollar cost averaged up. In the main, I own the trade desk since 2019, around $20 a share, and I did buy some shares at these higher levels. You know, $141 stock, buying it at 65. Can it go lower? Sure, but I would certainly love to buy a stock at 65 versus 141. Don't chase, don't buy the FOMO, buy the full, the fear of losing everything. This is about greed and you don't want to chase. This is about fear, and that's what I like to buy. The fourth pick here is going to be Arista Networks. The ticker is ANET, another AI data center play, of course, for networking. And this thing went from $133 all the way down here, closer to $80 a share. So you can see it kissed right off of this Fibonacci S2. Some algorithmic and electronic trading here at play. The S3 is a little bit lower, just under $70 at $69.48. But you can see you broke all the moving averages in that trend line. The only support left is this S3 at $69.48. So I really like this stock. You know, the lower the better for all these, but $85 or less DCA. Another new position in that primary taxable brokerage. This is ticker CEG, Constellation Energy. Another AI data center beneficiary. This was $352, dropped all the way down here. It's closer to $220. Looks like the low today was $221.25. And you can see it's bounced to $233, but still down 15% over the past 5 days. So we broke all the moving averages, including that 200-day. Found some buyers just above this S2, $219 or so. And this S3 is a little bit lower, $185 for the current S3. The previous S3 was $165, but I really like this stock. You know, $240 or less DCA. The sixth stock here is going to be Qualcomm. Now, this is one that, again, it got way ahead of itself, $230. I was telling the gang in Discord during chart day, and I wouldn't pay $230 for this. I wouldn't touch it over $175. We drew this circle up, which really is a $165 at the top of that circle, down to about $145. So we are in the middle towards the bottom part of that circle. I think if it gets $150 or less, it's really attractive with the dividend. You can see Qualcomm's paying a 2.19% dividend, that TTMP ratio about 16.5. Now, of course, there are risks with any stock. One of the risks here with Qualcomm is losing some of the business from Apple, but there is significant opportunity for Qualcomm when you think of those MPUs, those AI PCs and smartphones. So when you're thinking of AI at the edge in that next kind of phase, you're going to use Qualcomm chips, right? You're going to use those Snapdragon chips for the Internet of Things connectivity. And the S3 on here is about $139. It certainly could get lower. Any of the stocks we talked today could go lower. But again, you want to buy it at $230. Another one of these air pockets, right? This is an air pocket. You don't want to buy the air pocket. Now the air pockets collapse. I can feel comfortable buying this stock at these prices and sleep just fine at night. Number 7 is Taiwan Semiconductor, TSM. Now, like all these AI data center type plays, you know, it's come down significantly from the highs at 226, but there still is an air pocket here to this trend line, and the S3 is closer to $152. Well, we have broke the moving averages. You know, the purple line here is this 200-day moving average. The red is the 100-day. The yellow is the 50-day. I like this stock a lot. Really, where it's at $108, but of course, 175 or less DCA would be really attractive. And the lower, the better with all the stocks we're talking about today. Taiwan Semiconductor really is that true pick and shovel play for not just AI and data center. You know, companies like NVIDIA and AMD, Tesla, Apple, and so on. They rely on Taiwan Semiconductor to create these chips and manufacture these chips. It's a foundry or a fab. And not only is TSM a pick and shovel for AI and data center, really it's the true pick and shovel play for all the secular growth trends that we talk about. Of course, competition's, you know, heating up and trying to build foundries, but nobody can really touch Taiwan Semiconductor at this point. Over 90% of the advanced chips come out of Taiwan, and the leader, of course, being TSM. Now, of course, with a trade war in China, a stock like this is going to be very sensitive to geopolitical news and headlines. So you certainly could see more pressure on this stock. And again, all the stocks we're talking about today. The idea here is not to be perfect and try to time it perfectly. It's to buy prices that we're comfortable thinking as long-term investors, knowing that it could go lower and we'd buy a little bit more. And I know that doesn't fit everybody's thesis or strategy that's watching this video, and that's okay. Another new position, this is an ETF added in both of the growth portfolios. So the primary taxable as well as that community portfolio. This is SCHG from Charles Schwab, just like SCHD, but instead of dividends, this one's focused on growth. We broke the moving averages, and just like a lot of these charts, you know, we broke the S2, but it could go lower. The S3 is around $25.19. And this is a great ETF that gives you exposure to these companies. Now, you might not want 11% exposure to Apple. You might already own the stock. Same with Microsoft, 9%. But sometimes when the market's selling off really hard, I like to add some of these ETFs just to give me some exposure into a lot of great companies all at once. You know, you're getting exposure here to Tesla, but what's nice about it, it's diversified. It's not just technology. You're going to have companies like Eli Lilly, Visa and MasterCard, Costco, United Health, GE Aerospace, Accenture, Intuitive Surgical, Thermo Fisher. And it also has, you know, some of the favorites like the ServiceNows and Palantirs and so on. But this is a good ETF that you can look at to kind of build a core for your portfolio and buy individual stocks around. Another one you can look at is the Vanguard Information Technology ETF, which is VGT. And I do have a video you can watch at the end of this that gives you the top 7 growth ETFs to buy if you're interested in buying some growth ETFs to fill in your portfolio. So speaking of ETFs, a way to play semiconductors, you can buy SMH, which is the one I've been buying. You can also buy SOX, SOXX. This is going to have more exposure to NVIDIA. And like all the charts we're looking at, you can see it was way ahead of itself at 283, air pocket. This certainly could go lower. It kissed again off the S2. Your S3 is really close to this trend line around 205. So it's certainly possible you could see below 200. And of course, the lower, the better, the more attractive it is. But I like this really 225 or less DCA. And it's a great way to round out a portfolio because you don't have to worry about ETFs longer term. Some of the stocks are going to be green, some are red. It's like a casserole. You don't really care what's in the casserole. You just care if it tastes good. So it does help with some of the psychology too, especially for new investors, because you might have a stock down, 10%, another one up 10%, but all you see is what the ETF's doing. And what's great about these, you can hold them in conjunction with like an S&P 500 of VU, and you can blend in some of those semiconductors without maybe taking all of the exposure buying individual stocks. Now, I do have one more stock after this that I am buying. I want to cover NVIDIA, though. I'm not buying it because it's extremely overweight in my portfolio. Most of you guys know I've owned it since 2017. I've sold hundreds of thousands of dollars worth of NVIDIA profits, and I still have something like 13% of my portfolio. The cost basis is $3.94, but I want to cover the stock for you, look at a chart so you kind of have an idea of where it could go. Okay, so in Discord, I told the gang 114 is really the level that it has to hold. Now, yesterday's close, we had exactly 114.06. Of course, it went lower than that intraday, but it closed at $114.06. You can see now it's 118, and I do believe that 114 was a key area for the stock to hold. Now, of course, if you go on social media, they're going to tell you the stock's going to go lower. It's going to go to $60, $70. You hear all kinds of different crazy things. Could the stock go below $100? It certainly could. Right now, buyers are coming in. One bad headline, and you could bring it the other way, and you could see, this S3 is $96.69. I still believe you got GTC coming up, and I still believe that you're going to have a strong second half with NVIDIA and Blackwell. There are certainly risks to that thesis, and people are trying to poke holes into that. NVIDIA is crushing it, and it's going to have a second half that's really strong. I believe it's going to see new all-time highs the second half of this year. I told you recently 165 to 175. There's even a possibility $200. I'm not sure if you'll see $200 this year, but possibly in the next 18 months. So if I didn't own the stock, I would certainly be buying, especially this 115 level or less, 114, 110. That was a great area to add, knowing that it could go lower. If you buy it at 118, of course, just understand the downside risk if the market turns and takes another leg lower. Now, the last one I want to talk about is MongoDB, and this does report earnings tomorrow, so you have to be a little bit careful. Now, I just nibbled a little bit, and it did dollar cost average up, and I post this information live in real time as soon as I make buys right in Discord, but earnings are tomorrow. This is a DCA up from $173 cost basis, and I added 10 shares at $249.47. Not a perfect buy, and it could go lower. My preference really is below $225 for the stock, but now my cost basis is $181. If it drops after earnings, I'll add more shares. I'm willing to go 2% max my portfolio. Right now, it's just over 1%. If videos like this are helpful, make sure you subscribe to the channel, click that bell for notifications so you don't miss the next video. And please return the favor, drop me a like, drop me a comment. Have a great rest of your day. Take care.